April 2017 could be the best of times or the worst of times for North American stock markets, or perhaps a bit of both. Historically, April is one of the strongest months of the year for stock markets. It's also historically been a seasonal peak. There's a reason why people say sell in May and go away for the summer, and that's because we often find that markets tend to reach a seasonal extreme in and around the end of April, beginning of May. Now, March was quite an important month. It came in like a lion, with the US market blasting through 21,000, rallying to a new all-time high, and then basically slumped through the rest of March. We saw a bit of a correction. We've had exhaustion starting to appear in the US market because we had such a massive rally following the US election. The month of April has the potential to be split in two halves, centered around, with the dividing point potentially around the Easter break between April 14th and 17th. In the first half of the month, we're likely to see a focus more on economic data, on purchasing managers' reports and employment. The second half of the month, we may see the focus shift back towards politics as well as earnings. Earnings reports in April are particularly important. They're results from the first quarter, and it's the first quarter of earnings under President Trump. Stock markets have moved up huge since the US election on anticipation that President Trump's policies would be good for the US economy and for US earnings. Now we start to see, is this actually translating into positive results for corporations? April is also a busy month for economic news, particularly in the first half of the month. The street is still trying to get a feeling for how President Trump's policies are going to impact the U.S. economy. Through March, we saw that what we call soft data, things like consumer confidence and business confidence, did very, very well. But a lot of traders are still looking for signs that the hard numbers like employment and GDP and retail sales will also convert into economic growth. This could have a significant impact on how many times the Fed raises interest rates over the course of 2017. So in the first week of April, it's quite significant. We get ADP as well as non-farm payrolls. We get the manufacturing purchasing managers reports. And then as we move farther into April, we get GDP reports as well from a number of countries, China, the US, the UK, that could have a significant impact on trading. In terms of central banks, we don't have a Fed meeting this month. The April Fed meeting that is actually going to be on May the 3rd this year. But we do have a Bank of Canada meeting on April the 12th. This could be significant because although the Bank of Canada is not expected to raise interest rates at this time, they've been quite concerned about what President Trump's trade policies could mean for the Canadian economy. With the US starting to publish more details of what they want from renegotiating NAFTA, we'll get a better feeling perhaps from the Bank of Canada if they still feel like they're under pressure or at risk of a rate cut or not. Politics is another area where we could see a significant change in influence for between the first half of the month and the second half of the month. The first half of the month is likely to be a lot of politicians talking. There were significant developments in the latter part of March, such as the failure of the US healthcare reform bill and the Brexit Article 50 negotiations. The first half of April is likely to see politicians still recovering from that and preparing for bigger developments later in the month. So in the first half, we're likely to see President Trump continue to talk about renegotiating NAFTA, about currency manipulation, about tax reform, about infrastructure spending, and perhaps another go-around on healthcare reform, we'll see. But in the second half of the month, we then shift to more hard development once again. On April the 23rd is the first round of French presidential elections, could have a significant impact on the future of the Eurozone. Right at the end of the month, the EU is expected to have a summit to sort out their negotiating principles for Brexit with the UK. We also have on the 28th of April is the end of President Trump's first 100 days of office. We could see a push to move some things forward by then. And also we have the agreement on the debt ceiling runs out. Now it looks like at this point that both parties want to push off the big fight on the debt ceiling to September, but we'll see. Anything can happen in politics. Looking at specific markets, we'll start with the U.S. Indices, particularly the U.S. 30. The market really took off following the election of President Trump. On election night, the Dow traded down to about 17,500. On March the 1st, it peaked about 21,150. That was a huge, massive move. Over the course of March, we did see the U.S. index starting to drop back. We did see signs that it had become extremely overbought and was getting due for a correction. We may see U.S. markets continue to have a correction in April, but it's hard to say. April historically has been seasonally positive, so do we get a rebound into a double top toward 21,000, 21,100 is a possibility, but if we do, then markets could look vulnerable again as we head into the seasonally weaker May and June timeframe. Crude oil may remain active through the month of April as well. Following its big rebound in the early part of 2016, it appears to be leveling off for WTI in the $45 to $55 range. The issue is that the supply cuts from OPEC have provided support for oil prices, but the higher oil prices have encouraged U.S. producers to bring more production back on stream, particularly in the shale area, and we may continue to see this play out throughout the month of April. In particular, we could see a lot of trading action around the U.S. weekly inventory reports. There was a big buildup in U.S. crude oil inventories through the winter, but the refined products, gasoline and distillates, were actually coming down quite substantially. As we move into April, we'll see, do we get any kind of reversals in these trends? Do we see these big builds start to drop off? Or what happens with the U.S. market could have a significant impact on the oil price. This earnings season, we could also see significant action in the markets. The Trump trade, which saw certain sectors seen as benefiting from President Trump, saw stocks absolutely explode to the upside through the end of 2016 and early 2017. This has built up huge expectations for earnings, and now we'll see if the companies are starting to deliver or when they might expect it through their guidance. Two areas in particular that really rallied on the Trump trade were financials as well as infrastructure stocks. On April the 13th, the Thursday, kicks off earnings season with results from JP Morgan, from Citigroup, and from Wells Fargo. JP Morgan was a stock that was nicely trending upward, and then it kicked up into higher gear after President Trump was elected. It's been starting to look a little bit weak and coming back, and we'll see, is it going to continue on its faster upward trajectory, or could it have a correction and shift back down to its longer-term trend? Caterpillar, producer of mining and construction equipment, also had a major rally when President Trump was elected on anticipation that higher infrastructure spending would lead to higher demand for its products. Over the last couple of months, though, Caterpillar shares have leveled off in the $90 to $100 per share range as it's started to become apparent that infrastructure spending may not be top priority. It could get pushed off to late 2017, even early 2018. By the time projects get approved and funded, it could be quite a while before higher infrastructure spend finds its way to Caterpillar's bottom line. Its guidance could be particularly significant because of that this quarter. If we do see Caterpillar start to break 90, that could be indicative that the street is getting concerned about how long it's going to take for some of these Trump anticipation to pay off.